Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a three-wave corrective structure after which we want to see continuation to the upside. In this case, the first move down here is counted as an ABC zigzag, a 535 move where the common target for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the end of your wave B. And we also had some nice additional support over here, which was touched. Now, based on the local 15-minute structure over here, which I have in my folder and I'll show in a second, the probabilities at the moment are higher to look for a wave X and then another wave Y. We can be looking here for a sideways WXY, WXY, and then continue up, or potentially still a double zigzag where we have a wave W, look for X, preferably not touching the 0.7 at 61.2k taken from the start to the end of W, and after your wave X you then look for a 535 zigzag to the downside. Now, if we look at a sharp WXY, a double zigzag WXY, where X does not touch the 0.7, then the most common target at the moment for wave Y, being between the 1 and the 1.236 trend-based fib extension, taken from the high to the low of W to the current higher on the chart, is between 55.6k and 54.4k, with a minimum target being the 0.618 at 57.5k. Now finally, what you also see on the chart is a fib time, the 0.382 taken from the start to the end of wave W. Therefore, I am comparing wave X with wave W, and preferably your wave X is finishing after the 0.382, which clearly with the structure today has not yet happened. So preferably, if we're looking for a WXY, this wave X is going to continue ranging sideways here, finishing after the 382, which is the 13th of August, 4 p.m. Central European time, before we then move to the downside in a wave Y. Your bearish scenario is a double 1-2 to the downside after an ABC up. Wave 1, wave 2, wave 1, wave 2. Look for a bigger wave 3 towards the downside. The invalidation is very clear, moving above this high here at 61.8k. Common target for your second wave 2 is between the 618 and the 786 Fibonacci, taken from the start to the end of your wide wave 1. The moment you hit the 886 at 61.3k, the probabilities for this wave 2 will significantly go down. In a double 1-2, what we preferably like to see is bigger bearish CVD divergences. We already had bearish CVDs over here, but these have now played out. And what we actually want to see is more bearish CVD divergences between the wave 2s, which at the moment is not the case. Actually, instead, we have bullish CVDs over here. So that doesn't really help with the probabilities for this particular scenario. And also, your second wave 1 to the downside is longer in time and price compared to your first wave 1 to the downside. And your second wave 1 is a lower degree wave 1. In blue, we count 1, 2, 3, 4, 5. And inside the blue wave 3, we have the lower degree 1, 2, 3, 4, 5. And preferably, your second 1 and second 2 is a little bit shorter in time and price compared to your first 1 and 2. That is not a rule. It's more like a guideline. It's something that you prefer to see. Of course, in this particular scenario, you are looking for a strong impulsive structure to the downside to take out the low. And that is also partly the confluence between the different scenarios, is that the probabilities at the moment are still highest for price to sooner or later take out the local low. And because we at least have a potential bearish scenario being a double 1-2 to the downside, we have to be aware that if price does move to the downside and is going to visit some lower areas of support, we have to wait patiently for proof of support and signs of strength, because there is always that slim possibility you just tank towards the downside and you don't want to be on the wrong side. On the 15-minute time frame, this is what I was talking about earlier. A regular flat, a three-wave structure to the upside, a three-wave move to the downside in a wave B, higher probability this is a three-wave structure because we never had a 1, 2, 3, 4 and a wave 5. We reversed towards the upside. Also B touching the 0.9 Fibonacci taken from the start to the end of A, which is a minimum target for a B in a flat. And then the common target area for C in a regular flat is the 1 to the 1.236 trend-based fib extension taken from the start to the end of A to the end of B, giving you a target between 60.1k and 60.7k. Because the probabilities locally on the 15 are higher, this is a three-wave corrective structure being a flat, the probabilities are automatically higher to sooner or later still look for these lows to be taken. However, as explained on the 1 hour time frame, in both the bullish scenario where you look for a WXY as well as in the bearish scenario looking for another 1-2 down, preferably your wave 2 ends after the 0.382, which is not the case. As you can see, this high was made before the 0.382 fib time. And in the bullish scenario, preferably you finish wave X after the 0.382. Therefore, the probabilities on a 15-minute time frame at the moment are higher to continue this range over here sideways before then at a later stage move towards the downside, either in a wave 3 or of course a wave Y. But generally the probabilities are higher to sooner or later still take out this low. Looking at the CVD divergences, the bearish CVDs here played out, and on the 15-minute time frame, if I zoom in, we have both bullish as well as bearish CVD divergences at the moment. Higher low in price, lower low on the CVD, but at the same time also a lower high on price and a higher high on the CVD, so they are contrasting each other. Therefore, context becomes important and other tools that you like to use. And if you have no idea how to approach a scenario like this, just wait for one of the two CVDs to play out and then just wait for some new CVD divergences. So if we then finally look at the probabilities of the different scenarios, then currently on the 1 hour time frame, the probabilities are a bit higher for the bullish scenario where we are looking for a three-wave corrective structure and still priced to take out the high at 63k, compared to the bearish scenario, a double 1-2. Now for a double 1-2 scenario to increase, meaning 1-2-1-2 bigger wave 3, we want to see continuous bigger bearish CVDs as price is moving to the downside. We had the bearish CVDs here, but these already played out, but we want to see that continue. Bearish CVDs again, price moving down, bounce to the upside, more bearish CVDs, playing out, bounce to the upside, more bearish CVDs. And what you then get is pretty much the same as what we had over here, where every bounce that we had over here as price was moving down was countered by bearish CVD divergences, which then increases the probabilities for price to take the low. So this is something to at least keep an eye on. However, the fact we are aware of a double 1-2 means that if price moves to the downside once more, taking out this low, we have to be patient and look for proof of support and local signs of strength just in case. Because in both the bullish scenario, preferably you're still looking for these lows, and of course also in the bearish scenario, probabilities are higher to take that low, right? So in both of these scenarios, preferably you still take the low. But if you do, we have to be at least aware of a double 1-2. So if price moves to the downside, what I want to see is price to stabilize, range, show signs of strength, maybe with some nice bullish CVD divergences, and move towards the upside. On the 15-minute time frame, the probabilities are at the moment higher to still take out the local low over here, preferably also a continuation of the range, so going sideways for a little bit longer to make sure we end a three-wave corrective structure after the 382 fib times and then move towards the downside once more. The local move today counts best as a flat structure as shown. However, due to the 382 fib times in both the 1 hour scenarios, this preferably is only the first structure of a bigger three-wave move. Probability is highest to take the local lows at some point on the 15-minute time frame. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.